once again. We will move ahead with our panel 2 discussion on the topic dual listing in Gift City. Um, our panelists are already on the dais. Thank you so much. Let me introduce our panelist. Our moderator, Ms. Jyoti Vineet Tandon, compliance consultant and co-founder FinCrimeExpert. And our panelist, Mr. Pradeep Krishnan, Ramakrishnan, Executive Director, IFSCA, Mr. Vineet Surana, Partner EY, Mr. Siddharth Shah, Partner Khaitan and Company, and Mr. Vijay Krishnamurthy, MD and CEO, India INX. Over to you, Ms. Tandon. Thank you.
Thank you so much, and good morning, almost good afternoon, everybody. So we are the last ones that, as usual, get that coinage of being between the session and your lunch. So we hope to make it interesting because the topic itself, you've heard, starting with the keynote speaker as well. Very topical, very interesting times from an India perspective. In fact, I happened to be at GIFT just last week where we were doing a session again on talking about some of the themes which are important, and I'm a compliance person, so I wouldn't be doing justice if it didn't talk about compliance. And as you heard in the first session as well, whilst GIFT is building up and IFSCA is doing a brilliant role in terms of helping put those pillars together with the ecosystem that's building up, it will be very important to make sure that we're building it the right way. It's the right money, it's the right kind of people that are setting their substances being built out there. So it's a great journey, and I must tell you that I went about 6 months back before last week, and I can see the change in the buzz, and the excitement is just building with each month that's going by. So with that, let me start with thanking BCCI as well as the PE and BC forum for putting this half-day session together. For those that attended and didn't miss the first 2 sessions as well, it was brilliant, and it's led up to this theme. This theme in terms of dual listing, I think very forward-looking. I'm sure you all are all in the industry, and so you all would appreciate that we don't really have precedents, not just in India but also outside of India, in terms of AIFs and getting listed there. At this stage, of course, we're looking to dual listing and getting the right kind of companies here, so I'm sure we'll touch upon some of those aspects which are equally important for our fund industry, because the exits will need those kind of dual listings to help as well. So the whole ecosystem will have to evolve. Thank you, Sandeep ji, Ashish ji, as well as Tejas, therefore, for putting this theme together. Let me start our session with a very conceptual kind of question for our panelists. So may I just request Pradeep ji, for you as well as from an exchange as well as IFSC perspective, I'll ask Vijay ji as well after you to touch upon the concept of dual listing and what is the vision from a regulator perspective, and how the exchanges and the ecosystem is getting built out for dual listing.
Good afternoon, everyone. Pleasure to be here. I think the previous session was very enlightening, a lot of things to learn. And every time we come, we go with a list of wishes which we have to sort of take care. Now, the concept of listing, I'll just want to go, around a year and a half back when the finance minister came out with this idea that Indian companies can list internationally. And they said, okay, to start with, let us go ahead with listing on the IFSC. Okay, and then maybe after that, probably we can extend those listings to other foreign nations. So, in fact, there are stock exchanges like the London Stock Exchange, for example, which are very interested in having a dual listing partnership with India. And our stock exchanges are also talking to them. Now, the concept of direct listing itself is twofold. One is an unlisted company in India directly listing on in the IFSC jurisdiction. The other one is a listed company in India also listing further issues in the IFSC jurisdiction. Now, the second one will require blessings of SEBI, and presently, if a company is listed in India, there are multiple rules and regulations which they comply with. When you look at the listing regulations that we have brought in the IFSC, there are very significant light touch or fit for purpose features. Like for example, you can issue the entire offer to one person, one underwriter, or one investor, and you can go ahead with the issue. The issue will be sold. We don't have a concept of a 3-year lock-in. We have a lock-in provision only for 6 months, and that too we have said it's only for controlling shareholders. We specifically don't have the concept of promoter for non-Indian companies, and the issue can be kept open even for only 1 day. There are no granular disclosures that are specified. It is a contract between you and the investors. We have only given broad headings under which you have to disclose. So while we set about creating these regulations, we said that okay, instead of doing a mirror to mirror transfer, which anyway is not going to work out, let us see the international offer documents. How are they built? What are the things that they disclose there, and how are the things? So if you look at those things, they don't get into specifying the nuts and bolts of everything, right from starting or conceptualizing an issue till allotment and then finally listing. Everything is left to the procedures of the exchange and the contract between people. So a lot of selling happens in the secondary market. So generally you have large brokers, large merchant banks, investment banks. The concept of investment banking itself, because of course in India you call investment banking, but in India the reason why they changed to merchant banking is the concept of investment banking doesn't arise because they don't invest in an issue. Largely investment banks are those who actually have the wherewithal to invest. So that is why the concept of a hard underwriting doesn't exist in the Indian scenario. You have a soft underwriting because you need that much money capacity, monetary capacity in case the issue devolves to take it upon yourself. But we have said that we will have the concept of investment banking precisely with this idea. Now, towards this, there are two or three things which have to be solved. One is there is something called the LEAP rules, the listing of equity issues in permissible jurisdictions rules, which was brought in by the MCA. So in that rules, there are a few things which were sort of mentioned, which have to be sort of ironed out. It says, for example, issues like in case there is an inspection against you, you can't launch a public issue. In case there is an investigation against you, you can't launch a public issue. These are all like complete non-starters because the concept of inspection in the MCA parlance is completely different. You can just, for any reason, you can actually invest. That does not make that person a culprit. Right? So we have taken up these matters with the MCA and they are in the process of eliminating these non-starters. Then this will sort of take off. Then there are certain issues in the foreign exchange management NDI rules of the ministry and RBI. One of the things which probably may have an impact is the fact that for Indian companies, if you have a promoter, the promoter is not allowed to buy and sell in the secondary market. Like once the shares are listed, the promoter is allowed to offer the shares for sale in the primary market, but the secondary market, the promoter cannot buy or sell. So these are things which are non-starters. So we are ironing out these issues for Indian companies. Hopefully it should come. But for foreign companies, and particularly a lot of foreign companies where Indians are promoters, like you have companies in Singapore, in Luxembourg, in Delaware, US. So these are people who have already contacted us and they are interested in making a dilution in the IFSC itself. So that is the piece which we are working on. So already we are expecting two important things that are expected to happen. One is for any issuer to be in a jurisdiction, there needs to be an intermediary, and that intermediary is the merchant bank, right, or the investment bank. So we don't have an investment banking ecosystem there, primarily because of the fact that SEBI regulations, merchant banking regulations require that a merchant banker has to be physically present in that jurisdiction through a subsidiary form, not through a branch format. Now, recently, if you see the December meeting of SEBI, SEBI has allowed merchant banks to be there in a branch format. So once merchant banks are going to be there, we are expecting more companies to come. So essentially, for any jurisdiction to be attractive, A, it should have reduced cost of capital, B, reduced cost of compliance. So I think our regulations will certainly sort of match both these asks for any issuer. And then after a point in time, the secondary market liquidity will certainly build because, for example, if you have so many funds, they can also sort of invest in these equity shares. So essentially, this is how we are planning to go. The first stage is you get foreign companies listed. Second stage is you get Indian companies listed. Third stage is you look at dual listing maybe after some point in time. And this is the path that we are looking for.
Lovely. Thanks. That's really
And I also have to say this, the fact that listing in the gift city is very lucrative, of course Vijay will explain it better, is also brought out by the fact that already there are around 100 odd issues, 200 odd issues of banks, of bonds, which have already been listed in the gift city. And these are all by large Indian companies and also multilateral corporations like ADB, IFC, etc., which have raised almost $80 billion. Lots of sustainable finance has been also raised through green, social, and sustainable bonds in the IFSC. So the fact that listing in the IFSC is actually yielding some dividend is already proved by this thing. Only thing is that after bond, the next piece is the equity piece, which I think we should be able to sort of iron out in a few months.
Thank you. It's really very encompassing. So Vijay ji, you want to take that to the next stage in terms of sharing your insights from an exchange perspective?
Yeah, sure. Thank you very much for having me here, and we hope that the discussion today will be enlightening, fruitful, and informative about a gift, because I think so that is something which is very important for all of us to enlighten people about what's happening at gift. So coming to the theme today, and I would first like to really say that I have been in gift for the last a little more than 9 months now. And from the time I have been there till the time I am now in the last 9 months, there has been a significant development which has happened, both from an infrastructure wise as well as from policy wise and discussion wise. Infrastructure wise, when I went to IFSC, SEZ only had 3 buildings, and some of the buildings were, they were digging the foundation. But very happy to state that there are many buildings now that has, really, shot up, and, one is already operational. So, and from a regulatory framework perspective, I think so, we have a very proactive regulator there in IFSCA. And there have been a lot of changes that has come about, which is, whatever is possibly, I can say that whatever is possibly in their jurisdiction, they are all ears to the market, and they are adopting international best practices and trying to see wherever, instead of creating a roadblock, to see where they can facilitate each of these things to really happen. So really kudos to the, the regulator and the regulatory team there. Touching upon the listing part of it, as rightly mentioned by Pradeep, listing is already picked up at GIFT IFSC. All right. So we have, as he really mentioned, we have about 82 billion, more than 82 billion USD of bonds which are listed there, and happy to state that INX really leads that initiative from an IFSC perspective. So the next step is typically to get the equity there, and to see how we can really thrive with both of these asset class being there. What is the advantages of being there? Of course, there are certain operational, regulatory, or legal challenges which I think so is getting worked up with. But is there an ecosystem which is there? I guess it's a very important aspect to understand. So when I'm coming out with an equity IPO, whom do I need first? I need merchant banking, or I need an investment banker. So we struggled after 29th August 2024 when the IFSCA regulations were out. We had a lot of queries, we had a lot of inquiries by companies as to what is it, how is it, and there was a lot of buzz that is happening around this piece of listing of equities, or direct listing for that matter. But what we found as the first initial step, which is having a registered investment banker, was missing there. So we did meet a lot of them, and I'm very happy to state that we have now 3 or 4 of them who are registered there, and they are really working very hard to get in companies to do that. From an investment banking perspective, I think so one of the feedback that we took it to the regulator has been implemented, which is the net worth has been brought down. Right, so now you only need to have 1 lakh USD as a net worth for you to be an investment banker there, which was earlier 7.5 lakh USD. So that is something which will again pave the way for the investment bankers to come there and be there. The other feedback that we took to them, and they are also working with the counterpart regulator on the domestic side. Hopefully we see the thing very fast in terms of, they are allowed to operate as a branch. So that is something which is getting resolved, and we already have 4 registered merchant bankers who are small to mid-size, And so we are working with them. So that is, that is there. Second is there are two exchanges which is already existing. So we already have exchanges. We have the listing frameworks that is there. We've already put the listing frameworks for both, debt and debt is already there. So equity, from an exchange perspective at INX, we already have the listing framework in place. The third is the systems from an exchange perspective. We being virtue of a subsidiary of BSE, who's our parent, we have the advantage of getting the systems there with a little bit of tweaks. So there also, we are ready with the systems in place. Then comes how do you really clear the entire piece. So we have two clearing corporations of both the exchanges. So that is also a piece which is really taken care of. And then the depository piece, which is also existing. So as an infrastructure, as an ecosystem, that is something which is needed from an IFSC perspective. I think so the entire pieces are there for us to really take things forward and ahead, which are very important, because if even one of the pieces were missing, and how much our regulations or legally you are there, it's very difficult for somebody to really come and raise money, raise capital, or list their bonds. As sir mentioned, very interestingly, there are discussions which is happening with global exchanges as well to see how we can really leverage the dual listing. And hopefully we see the light at the end of the tunnel soon. As an exchange, we very closely working with a lot of at least the 3 or 4 registered investment bankers there, and very happy to state that there has been a significant amount of interest that we are seeing, and at least half a dozen of them are looking at doing things at a quick pace. I also just wanted to touch upon one thing. Is it that all the Indian companies or unlisted companies will be interested in listing there? The answer to that is no, very clearly. Those who have got businesses done in INR, they would not want to come to that jurisdiction to raise capital in USD. No. That's something which is not, logically, that really does not augur well for them as well. So who is the target audience typically from our perspective? One is the startups. Why startups? There could be, investors who have invested at the very beginning and they would want to have an exit route, right? So the regulations have made it very easy, right? Whatever Pradeep ji really mentioned some time back, one single investor, dilution of only 10% can be open for one single day, so on and so forth, right? So that makes it very easy. So if I am an investor in that company, I would want to have an exit, I can have an exit. But why only IFSC? It gives me a global audience to really participate in my dilution, right? So if I am in tech startup or if I am in startup which has a brilliant idea, I open the floor to the entire global investor, say that, okay, here I am. Whoever is wanting to interested can come and, really take a stake. So that really is very interesting from a startup perspective. The other one is Indian entities who have subsidiaries abroad, right? So there's a lot of dealing for these companies with their subsidiaries who are registered abroad, which is more in terms of the foreign currency dealings which is there. How does it help? Firstly, because they are raising in the foreign currency, it's a natural currency hedge for them, right? That's number one. Number two is we'll talk about the current regulations. It's principle based. It is not very prescriptive, saying that you need to do A, B, or C. It's like he mentioned, there are heads which is given and you need to comply with those. And having also worked on the domestic side and right now at the IFSC and seen some global examples, I think so the regulations that has got framed is at par with, if not better, at least at par with the global regulations from a regulatory perspective. So it really paves the way for somebody to really come. The cost of, very rightly said, why would somebody come to IFSC? My cost of capital and my cost of compliance. So my cost of capital is definitely low. If I was to compare it with going to a US and raising money in USD and listing it in a NASDAQ or an NYSE, as compared to that, the cost is negligible at IFSC right now. Right? Because we are in the process of building the entire ecosystem. So we do not want to create these kind of roadblocks in term, for people to come in. Regulatorily, again, the regulations are quite easy. I would say, when I say easy, I don't think so it should be misinterpreted. The regulations also take care that enough disclosures are made so that the investors know what they are getting into. Right. So when I say easy regulations, it does not mean that people can just come away and do things and go away. No, that's not what I would really want to communicate. What I really want to communicate is there's a really well balanced, regulations which are in place that ensures that the cost of compliance is low. At the same time, there is enough disclosures that happens so that the investors who are getting into the particular investment into a particular company are aware of what they're getting into. So it's a well-balanced thing which is currently there. So with these two things being there, which is your lower cost of capital and the lower cost of compliance, of course with other things that really needs to get ironed out, which is being worked upon, this is going to be one of the best places for somebody to come and raise capital, especially with the examples that I gave, which is a startup and an subsidiary of an Indian entity who is registered abroad, who can come and raise capital. That really is going to help them in all of these different ways. The other advantage for a global company to come here and list at IFSC is Indian resident investors can invest the money there. Right? Through the extent of $250,000 that they are permitted under LRS. Last year, India has seen the maximum IPOs, which I guess close to 350 IPOs. And very happy to share that 87% of the money has come from Indian residents only. 13% is from FPIs. So there's a lot of money that is there within the Indian ecosystem to get invested. And everybody is looking to diversify. So when you have these global companies coming in, right, there's a lot of potential for the Indian money to get invested in those companies as well. So that's another advantage for somebody who is a globally registered entity to come and list at IFSCA. And from an exchange perspective and a clearing corporation perspective, which is an arm of the exchange, we are, framework-wise, we are ready and prepared. And from systems perspective, we are ready and prepared. And we'll be happy, to meet, discuss, and really promote this entire piece. Yep. Thanks.
Thank you. Thank you, Vijay. So I guess this was one of the things that we, in any case, wanted to touch upon in terms of the ecosystem and its preparedness, from a Gift City perspective for handling dual listing, which, you've already alluded to, that the pipes are already tested and therefore working. So let me move to my other, co-panelists, Siddharth as well as Vineet. So you all have the unique advantage then, after we've heard the regulator and the exchange, of knowing what, the people that want to list there, what the clients are really thinking. So could I request you, Siddharth, first, and then Vineet, to touch upon what you hear from potential clients who are looking at listing at Gift?
Yeah. Thanks, Jyoti. And I think I must thank both the regulator and the exchange for setting the background. So I think also sharing my own perspective, having been associated with Gift almost since its inception and having seen how it has really evolved. I think I'm quite confident that this new product, today we are kind of crystal gazing into how the listing regime and the dual listing will take off. But if you really see the success that Gift has achieved in some of the segments that they had started off, I'm very confident that I think this will be a product which will definitely resonate with a lot of Indian companies, of course, to start with, and of course the targeted entities that were mentioned here. But I think it can definitely play a very, very strong alternative for global companies and regional companies for that. I mean, if you really look at the capital markets globally, I mean, we are today amongst the top 5 capital market in the world. I mean, and that itself, if you look at it as a potential, I think we can definitely say that we have a huge opportunity, not just from within India, but also for outside India companies. I think, again, bringing a slightly different perspective, and again, which is where I feel they will also be a very strong catalyst. I think funds. If you really look at today, Gift City, I think the way the funds regime has kind of taken off, and I think all thanks to the policy making, I think the benchmarking of the regime, which clearly has helped, saying that we are an international finance center, our benchmarking has to be something which earmarks with what's happening in other international finance center and not with what's happening on the ground, because the considerations could be very different. So I think drawing the same concept, I think the funds will also be a strong catalyst for triggering this listing. And I think very clearly the ecosystem for funds already exists. I mean, with close to 200 funds who are already kind of licensed operationals, very actively investing in India. I think they'll be the first kind of catalyst to trigger listing for many of these entities or portfolio companies. So I think I'm quite excited that both the ecosystem will work hand in hand to really trigger the listing and the direct listing as well as the dual listing requirement. Also, I think we have traditionally seen a lot of startups have taken the offshore holdco route, right? And then with the same idea that their access to wider pool of capital, more flexible regime which allows them to capitalize on the value, maybe the industries which give better value or the markets give better value. I think a lot of those considerations triggered people or startups to set up their structures offshore, even though their substantive kind of operations or backend was always India, and then the markets were also India. I think for them, I think this listing will be almost, I mean, one option for them is always to do a flip back, and I think which we have already seen in the last few years. So many of them flipping back onshore and then looking at Indian listing, which is great, and I think that will continue. But I think a direct listing or a regime combined with a holdco regime, which I think was talked about or touched upon over there, and with a gift gives them the best of both in terms of having a dollar-denominated product, giving more comfort to their global investors to get exits in dollar terms without being exposed necessarily to the currency risk. At the same time, being close to the market, which gives them the value for their business. So I think that is itself something which will definitely trigger a lot of thought process, and we are starting to hear a lot from some of our clients who were obviously looking at flip very actively, but now they also have got this new thing in the mix. Why not gift? And is that an opportunity for them to explore? So I think that will again be a very, very significant kind of contributor to this, in my view.
Thank you. Thanks.
I would like to add just one point before Sandeep, sorry, is that, see, one common misconception also which a lot of people, and I just took a thread from what Siddharth was mentioning, and I'm glad he mentioned that, is that there is no need for you to be present in gift to raise money from the gift. So that is also a common misconception which a lot of people have, that you need not, whether even today for bonds, there are some 80 odd issuers who have taken advantage of it. None of them is present in gift. You need not be present in gift. So just like you can raise money from Singapore or Luxembourg, you can do it from here.
Thanks.
Thank you.
Good point. Yeah.
Jyoti ji, thank
Yes,
you, and
yes.
thanks to BCI for having us here. It's really been a very insightful morning for me personally. Just hearing the first session, the keynote speaker, very enlightening. I hope you all find it similar. To me, I think a number of things that are being said and shared here, right? Firstly, Vijay ji used the word ecosystem, right? If you are hearing him carefully, ecosystem is ultimately critical to everything that we do. I'll just take that argument forward to say it's about the orchestra of the ecosystem as well, right? The link between this panel and the previous panel is, when we're talking about the AIFs and the wider fund management industry per se, ultimately it's the investors who are pooling money to companies, right? So, as we heard in the previous panel, if the investors or the LPs are now aware of what and where the money is being invested or being raised, then ultimately if a company, think about it, whether it's a promoter owned or a family owned business, or it's a private equity or a VC owned business, right? That's how a company or our clients really think. They will need to decide, where should we raise money? Right? Ultimately, an IPO or a listing or any of the thing is about raising money. So where should we raise? Whether it's a form of debt or equity, right? And when they're deciding it, if the ecosystem is aware of the funds and the availability of funds and the ease of raising funds, then that's step one. It's like, to me, when a small child, I don't know how many people here swim, but when you're looking at a swimming pool, you're very hesitant, should you jump or not, right? That first dip in the pool is what it takes. Are you comfortable with the water? To me, a listing or raising money or any exchange which is evolving takes its own time, and all good things take time.
It's always difficult to make your first million.
Yes. So it's about that and that ecosystem. So I'll hand it back to you, and happy to share more thoughts.
Yeah. No, lovely. That's a good point. And so I think it's really going to be a game changer, dual listing, from that perspective, because as we're all touching upon that aspect, that the whole ecosystem has to get built up for it to all evolve from a build-up perspective. Lovely. So then moving to something that's again very close to all of our hearts, I think, on this panel. So what do you, and maybe we'll start again with y'all, if y'all are comfortable, Pradeep ji and then Vijay ji, and then we'll move to both Siddharth and Vineet. So what are really then, therefore, you see the challenges at this stage for making dual listing happen?
So first, let me give the challenges for direct listing, then I will go to dual listing. In case of direct listing, the challenges presently are, there are certain amendments. First thing is that the Indians being permitted to invest in issues by Indian companies in the GIFT. That is not happening as of now. So maybe that could be something where the RBI can sort of relax, at least for investment in the Indian companies through LRS, it can be done. Second one, if suppose plan A does not work out, there can be plan B, whereby at least the mutual funds in India can be permitted to invest in these issues, because these are all having pots of money with, and this one more avenue to invest, right? One more good avenue to invest. The other one is there are some changes which have to be made to the LEAP rules. Presently, the LEAP rules allow only equity shares to be issued in the IFSC. So during our meetings with the startup clusters, we came to know that the most common instrument which is issued by startups is cumulative convertible preference shares, right? So we are going to change that also. We already given that thing to the MCA, so whereby convertible preference shares can also be issued. So instead of equity shares, the rule is going to be changed to equity instruments, which means that anything which is equity and convertible into equity can be issued at the GIFT. So this is also one thing. And the other things which I talked to you about as far as the investigation and inspections, these are minor things which have to be sort of ironed out, which we will sort of get ironed out. Now, once I believe the merchant banking piece gets settled, whereby the SEBI allows merchant banking, it has already been approved by the board. It is just that it is getting delayed for notification. So once that comes, the entire merchant banking people can, the ecosystem can sort of come here. Now, when it go to dual listing, so dual listing is a little more complex. The reason is essentially when you're talking of dual listing, you're saying that one company will be sort of listed in two different jurisdictions with money and shares moving seamlessly between these jurisdictions. Now, that is a very huge ask. That's going to be a longer thing and it will take more time. And that I believe will take off only after the GIFT ecosystem, local ecosystem actually succeeds. Like for example, today, when it comes to our bonds, most of our bonds have the depositories for most of our bonds are international depositories. So which means that some of them are not held here. Now only the local depository is taking off. But largely the depositories were there. So we have sort of proved that that can still exist, whereby your bonds can be sort of kept in a different ecosystem, but they can be listed here. So that is something which we have proved. But sometimes what happens is, particularly when it comes to negotiating with international exchanges, international jurisdictions, what we have heard is, there is a very famous quote by John F. Kennedy: you cannot negotiate with a person who says what is mine and what is yours is also mine. So that is what is happening, particularly with Western people. The most thing which what I have seen, the Western ecosystem, and not to sort of demean anyone, the negotiation is so hard-nosed that they are not okay to yield an inch, but they want a mile. Right? That is how I think they came here and they ruled for 300 years. So I believe that's what they want to continue even when it comes to trade and other things. So that is probably a little away. So it will take some time, but we are confident that that will also, because for a period of time the world economy is getting a lot more interlinked. Right? So whatever happens in one part of the world will definitely affect you. It's not, we are not sort of insulated from that. So then this is actually a natural corollary of that. So after some point in time, this dual listing will certainly be a thing whereby you can also list in London, for example, and maybe in GIFT also.
Yeah, thank you. And potentially even the passporting.
Yeah. Passporting of funds. So again, so when it comes to passporting, there are, again, it differs from region to region. Okay. Now, European Union has a passporting regime only for funds within Europe. Like for example, you can sell from a Poland fund can probably sell in UK. So presently they don't allow passporting. American funds can be done, but for non-American, non-European funds, passporting does not happen. So it'll that's also again it's a more of thing. And most of these things, if you see, are reciprocal. If I allow this, you will also allow this, and then we'll have to look at the measure of how much impact that will have on my economy, right? So because there are economies that have grown, there are economies that are growing. So the impact on both will be different. So those things will have to be taken into account before the passporting or even regulatory equivalence is actually sought.
Thank you. So, Vijay ji,
So as an exchange, very clearly, one of the challenge, and I think so we have already started addressing that challenge, is what I spoke about is awareness. It's very limited. So that is something which is a larger challenge today with respect to GIFT, its regulations, its jurisdiction, and what is being done there. So that is going to be something that we would want to address as an exchange, as an MII, to see how do we create this kind of awareness among the companies who want to come there, and among the investors as well, because you're rightly so the future of fund management, and rightly touched upon by Siddharth ji and Vineet ji, saying that AIFs as a piece is going to be very critical, and it's also an alternate investment avenue for them. So that's also going to be very important. So awareness is one of the key challenges which I'm going to state. Number two is for although I did mention that we are a subsidiary of our parent and we get all the knowledge, information, systems and everything. But for all of us as an ecosystem, it's going to be, the listing is the first of its kind, a direct listing. So whatever are going to be the, for the first company to get listed, I think so that's going to be something where we all need to work together very closely, because we're all sitting and we're all talking at, maybe a 1 lakh feet. When we really come to the ground reality, when the papers start getting filed and when we start, really analyzing each step, each process one by one, I think so that's going to be, one of the challenges that I'm going to see. May not be from an regulatory, legal and all those aspects, but it's going to be these operational challenges which are going to be the nitty-gritties that needs to get worked on, is going to be, a challenge, and especially for the first company that's going to come and going to be listed. But I think so, having known that this is going to be a challenge, and that we foresee that this is going to be a challenge, we have actually proactively started working on some of those things. We have started putting down, each of those points into breaking each of those steps into multiple steps, and seeing who needs to be taking care of what and all of those things. And even in that aspect, when we do that, we have a lot of discussions with the regulatory team, as we go along, because we identify some of those things. So To me, these two are going to be, very, very important steps. And why I did mention the second one is because based on the experience that the first company is going to have, and as rightly put up by both of them saying that the first one is going to be the first jump into the swimming pool to test the waters and make the first million is difficult. The experience that will be shared by the first company is going to list is going to be very, very important for all of us. If that process, if we are able to, and we, I mean the entire ecosystem, and I'm part of that ecosystem, so I would really want to take on that responsibility onto my head as well, saying that we need to make that process, that experience extremely seamless, extremely comfortable for the first company to get listed. All of us who are involved. I guess that is going to be a very, very important step for all of us. And once the first one is listed in a pretty seamless manner, I think so. Then we are good to take off in a right way.
Thank you, Vijay. So maybe Siddharth and Vineet, you can tell us who's going to be that first one. Is it a startup or who's coming?
So
but yeah,
I
please
think,
also touch upon the challenges you're hearing.
Sure. So I think, again, my sense is obviously it's going to be the direct listing first, because dual listing is definitely something where there is a lot more overplay. And then specifically on the dual fungibility, if you really look at it, a market where you can actually easily trade and convert from one to the other, I think that has its own challenges. And if you go back to the early ADR days, when I think every Indian company was thinking of an ADR, and then even in those regime, I think we could never achieve complete dual fungibility. So I think somewhere along the line, I think that has its own challenges, and then that is where it might take time. I'm still hopeful that there will be a solution there. I think one of the other learnings, I think, for all of us, I think even when India implemented the IDR regime, Indian depository regime, and there was obviously a lot of buzz at that time that, okay, that allows global companies to list in India, create a depository framework. And except for the one maiden issue that we had, that has never really kind of taken off. So I think there may be learnings from a lot of that experience that I think we need to include. And one good thing out here is it's really you are giving the flexibility of a dollar-denominated product. And I think unlike an IDR, which had that inherent limitation. So hopefully that handicap may not exist for listing in Gift City. So I think that may be one of the things. But otherwise, I think while we may get the first one to list and a few more to list, the key element, I think, is going to be creating liquidity in the exchanges. And I think who are the stakeholders who will create that? So I think clearly funds will be one, because that ecosystem exists. But how do I open up that market or exchange to more and more retail participation from global investors? I think there will have to be an infrastructure created around that, because I think whether it is about, some work has already been done about omnibus accounts where retails and others may find more flexible, brokers can kind of trade on behalf of. I think how that system will really play out and create genuine liquidity, I think that to me is going to be the real kind of proof of the listing. Because that, if we don't do that, and we've seen, if you go back to AIMS market, right, alternative investment market, at some point was kind of really considered to be, everyone wanted to be on the AIMS market. But where it failed was really where that whole liquidity and a lot of those issues, it could not kind of keep up. I think the companies realized that that may be. So I think that to me has to be a work to be done alongside all the groundwork which is done today for enabling listing. I think how the other side, the demand side of it for that product is built, I think that would be something which would be very, very important. And just lastly, I think one of the other points, and again, this is just an idea about, while we keep talking about dual listing and direct listing, which means there has to be an active offering of security or dilution there. I think I don't know, and I'm sure that's something which should be evaluated, whether a secondary listing is also something which can be explored, because I think at some level it can allow a lot of companies to test the waters and test liquidity without necessarily having to go out, do a dilution, and at the same time gauge the market. And I think maybe at some point, I'm not only saying for Gift City, but even for India today, if you have privately placed entities having thousands of investors who have, and then they're as public, one would look at it in terms of, but today I think can those entities also in some way be brought at, from a corporate governance, from a listing perspective, can there be a window open for allowing these entities without having to go through the dilution process? I think that may be a product at some point, may need to be also evaluated for India and maybe for GIFT as well. So I think those are some of my thoughts.
And by the way, that is actually allowed. The new listing regulations allow that secondary listing.
Okay.
For companies which are already listed.
Okay.
But,
But Indian companies
we'll have it.
To me, I think there are three key aspects. One is about being distinctive. Two, it's about longevity. And third is about creating a legacy. Right? And what I mean by these 3 points is being distinctive. Today, in 2024, there were about 320 listings in India, out of which about 90 were in the main market. Everything else was SME. Right? This was number 1 exchange worldwide in terms of number of IPOs that have happened in India. Right? If you rewind back, we were number 7 in 2015-16. Right? So just give you some context. Point number 2, each of the exchanges, when we look at it from a global perspective, and I'm taking some liberty because I spent about 15 years of my life outside India, all of the exchanges have some distinctiveness to them. For example, when we're thinking about the US, people generally think, is it about tech? Is it about large tech? Is it about global companies or global businesses that should list in the US? When you think about London Stock Exchange, people start thinking about natural resources, telecom, infrastructure, African companies, European, Asian companies listing on the London Stock Exchange. When you think about, South Africa, metals, minings, so on and so forth. We think about Singapore, right? Again, financial hub, global hubs, different InvITs, REITs, those kind of products. Hong Kong, Shanghai, again, largely been very domestic, post, the last 10, 15 years. So where, therefore, do we position Gift City? Both from being distinctive from a company's perspective, let's say we want to list on Gift City and these are the advantages for them. Equally, why not the other exchanges is because that's how a company will decide when they're thinking option A, B, C, and D. Right? So having that clarity, and that could be through equity instruments, it could be through liquidity, it could be through, the general principles all, stand across, whether it's governance, liquidity, across the markets. Point 2, in terms of, where and why these companies would really look about it and what the longevity means is it's not just about the listing. Listing is just a point in journey as well. So it's a very significant event for a company to do that. And therefore, for the investors, the investor community, and the ecosystem to flourish, it's about having that lifeguard as well. That yes, I'm taking the swimming pool, coming back to the same example, but there's a lifeguard standing that will not let me drown. Right? And then lastly, in terms of legacy, what I meant by that from a word perspective is thinking about the company, whether it's bond, equity, overall key instruments, the derivatives, the overall exchange. I think all of that is coming together. And all of that has to come together in a very seamless manner. And once that platform is there, that's what a company really needs to decide. So it's that education, awareness, I think from what I'm seeing outside last few years, there's a lot of awareness that's already being created. I think we're in the right path, we're in the right direction to move forward. I think it's now about bringing that to bear. And there's a lot happening on the global exchange. If you really look at the West, if you look at some of the other exchanges, India is the place to be. This is where everybody wants to come invest in that. So I think what is known to be done is already known. Now it's just about walking the path to make it happen. So really looking forward to what's coming in the next 3 years.
Yeah.
Thank you.
Lovely. Thanks a lot. So I think we are running short of time, but can we take a Yeah, so we are open to taking questions then before we close. Okay, seems like not, but
Yeah.
yeah.
Okay. Okay, Mr. Pradeep, you just mentioned that there is no need of presence in Gift City when you bring in investment. What does that mean? Entity is not required,
For listing, you need not be present in the list.
but if you bring in funds, then
If you want to operate a fund, you should be listed.
Just one more question regarding the equity instruments also you mentioned. So it is already there under securities, right? So CCPS is already there in securities.
So there is a rule called the listing of equity in permissible jurisdictions rules, equity shares in permissible jurisdictions rules. So unlike India where only the SCRA applies, in the IFSC jurisdiction there is also another rule which applies, which is because the power to list abroad comes from section 23 of the Companies Act. Right. So that is, and under that some rules have been made, that is a listing of equity shares in permissible jurisdictions. So that does not define
Securities and
that
instruments.
does not allow convertible to equity to be listed. So that's a technicality, but we have already taken
Definitely.
it up with MCA.
Yes, we can take a last question.
So the bond issuances that have been done in Gift City, if you're to compare the rights that the bondholders have to the listings that are done in India, is there any difference or are there any benefits or is it at par?
No, they have the same rights.
Same rights.
You have the same trustee, you have the same disclosures are made, quarterly disclosures are made, pre-issue disclosures are there, post-issue disclosures are there, and in case it's an ESG fund, ESG bond. In fact, the ESG ecosystem is actually taken off, which is not taken off in India. It has actually taken off, the ESG bond ecosystem has taken off in India. So we have almost 30, 40 listings of ESG bond, almost 40 listings, and almost 20 billion has been raised. And it's not only green, it's sustainability linked, and also social bonds have been raised out of this place. So investors get periodical disclosures of the granular disclosures on ESG related matters also, when if they have invested in ESG bonds. So the rights of the investor are the same. And in fact, it actually got tested where one of the first defaults has happened of one company called Avion recently. Similar thing which is available as far as the local investor is concerned is also available too.
So even in terms of security, because there are restrictions on what kind of security a foreign investor can create in India, specifically real estate. So are there any differences on that front or?
No. So this is like, what the thing is that we have foreign issues have been made only by ADB and IFC so far. Foreign companies have yet not made bond issues so far. So far the companies which have made issues are all Indian companies, and any securities server, we have no restriction.
Right. Thank you.
Thank you. Thank you, ma'am. Thank you, experts, for such an informative session. Thank you, Ms. Tandon, for moderating so well. Thank you, experts, once again. Now I invite our DG, Mr. Sandeep Khosla, to please present a memento to our experts as a token of our appreciation.
Thank you.
Thank you so much. I request for a group photo. Thank you, experts. Thank you. Now I request Mr. Sandeep Khosla to please deliver a vote of thanks to our gathering.
Thank you, Priya. We had two very informative sessions, very well attended and moderated by our moderators. We had a nice keynote speakers, and thankful to our guests who come especially from Ahmedabad from Gift City to interact with us today, and all the experts here. My special thanks to Clarence and partners for partnering us on this one. Uh, all of you, I'm sure this would have been a very, very informative session for you all. Like I mentioned in my opening speech, we keep on doing a lot of these. In the last 3 days, we've done 4 on different subjects. So in case you're not a member, it's a high time to become a member of the Bombay Chamber and help us take this forward, because there is so much excitement happening everywhere. And we at the Chamber are at the forefront of every change which keeps on happening and informing our members. We've got almost 4,000 odd members, of which, as you know, we are in Mumbai city, so a lot of our members are from the BFSI segment. So a lot of interaction happens. 2 out of our 3 presidents are always from the BFSI segment. Nilesha was the last one. Pinky Mehta was from Aditya Birla Capital. Next one is Rajiv Anand, who is Deputy Managing Director of Axis Bank. And then we struggle to get some manufacturing president in. So, to all of you all, again, thank you for coming, and please join us for lunch.